Welcome, friends. It's wonderful to have you here today.
Alright, let's dive into the big question everyone asking. Is Bitcoin about to see a major price drop? Everywhere you look, analysts are pointing to one specific number, $82,000. But why this exact figure? Is it just a random guess, or is there some serious data behind it? Today, we're going to break it all down, piece by piece, and uncover why 82K is the magic number on every trader's chart right now. We'll look at the technicals, the global news, and what the big players, the whales, are doing behind the scenes. Is this a dip to fear, or the buying opportunity of a lifetime? By the end of this video, you'll have a much clearer picture. So grab your coffee, get comfortable, and let's get into it. First things first, we need to understand the recent price action. Bitcoin has been facing some serious headwinds. We saw the price test a crucial support level at $88,500, but it couldn't hold. The bears pushed it down, and that support broke. Then all eyes turned to the next line of defense at 85,000. For a moment, it seemed like the bulls might make a stand, but the selling pressure was just too intense. That level also crumbled. Now, when key support levels like these fail, it sends a strong signal to the market that the correction isn't over yet. Think of it like a staircase. We've just gone down 2 steps, and now we're looking for the next solid landing. This is where things get really interesting, because the next major level isn't just another step, it's a foundation. So why are all these analysts now laser focused on $82,000? It's not just a hunch. It's all about historical data and market structure. The zone between $82,000 and $83,000 represents the strongest demand zone on the chart. What does that mean? It means this is an area where, historically, a massive number of buy orders have been placed. In previous bull cycles, whenever the price dipped into this range, buyers swarmed in, creating a powerful bounce. It's a psychological level where investors who missed the earlier run-up feel comfortable entering the market. More importantly, this is where the whales, the large-scale investors with deep pockets, love to make their move. They see this zone as a prime area for re-entry, a place to accumulate more Bitcoin at a discount before the next leg up. Their huge buy orders create a massive wall of support. So 82,000 isn't just another number. It's a battleground where the bulls are expected to make their strongest stand. That's why it has become the most important level to watch. Now, let's pull up the charts and get technical. If we zoom in on the weekly candles, the story becomes even clearer. Bitcoin is still very much in a correction phase. A key indicator we look at is the Relative Strength Index, or RSI. Right now, the RSI hasn't reached the oversold territory yet. This suggests that there's still room for the price to move lower before buyers feel it's a true bargain. The downward momentum might continue. Another powerful indicator, the MACD, which stands for Moving Average Convergence Divergence, is showing a bearish crossover. This is a classic signal that short-term momentum has shifted to the downside, adding another layer of weakness to the chart. But the most compelling piece of evidence comes from liquidity pools. The largest pool of liquidity, which represents a massive concentration of buy orders, sits right at the $82,000 mark. This is where major buyers have placed their bets, waiting for the price to come to them. If Bitcoin does tap 82,000, the sheer volume of buy orders at that level could trigger a very strong and rapid bounce. However, there's always a but in trading. If this critical support at 82,000 fails to hold and the price breaks below it, the next danger zone we'd be looking at is around $76,000. It's not just the charts that are telling this story. The global economic landscape is also adding significant pressure on Bitcoin. For starters, let's look at the United States. The Federal Reserve has not yet started to reduce interest rates. High interest rates tend to make riskier assets like crypto less attractive compared to safer options like bonds, which now offer a decent return. This higher for longer stance on rates is a major headwind for the entire crypto market. Over in Asia, the markets have been trading weakly. When major economies show signs of a slowdown, it creates a risk-off sentiment that spills over into global markets, including Bitcoin. On top of that, we're seeing that crypto funding activity has cooled down. The venture capital money and institutional investments that fueled the last rally have slowed, indicating a more cautious approach from big investors. All these factors combined create a perfect storm of short-term bearish pressure. This global macro environment is exactly why many analysts are warning that this correction might have a little further to go before we see a true reversal. So, we arrive at the most important part of our discussion. Is this dip a trap designed to lure in unsuspecting buyers before another leg down? Or is it a life-changing opportunity to buy Bitcoin at a discount? Let's get some perspective. In every single bull cycle in Bitcoin's history, corrections of 25 to 30% are not only common, they are completely normal and healthy. These pullbacks shake out the weak hands, get rid of excessive leverage, and build a stronger foundation for the next explosive move higher. It's like a slingshot being pulled back before it launches forward. If the whales and institutions do what they've done in the past and start accumulating heavily at that $82,000 level, the bounce could be incredibly powerful. A successful defense of that zone could easily propel Bitcoin back towards 95,000 or even a new all-time high above $100,000. But we have to be realistic. If the macro conditions we just talked about stay bad or get worse, the correction could go deeper. This is why it's so important not to FOMO fear of missing out. Instead of trying to time the absolute bottom, a much smarter strategy is dollar cost averaging, or DC. By investing a fixed amount on a regular basis, you average out your purchase price and reduce your risk. So, putting it all together, what's our final prediction? Based on all the technical and fundamental analysis, it seems very likely that Bitcoin will touch the $82,000 mark in the near future. This level represents an incredibly strong support zone, backed by historical data and massive liquidity. Therefore, there is a high probability of a significant bounce from this level. It's the most logical place for the current correction to find its bottom. However, no level is unbreakable. We must be prepared for the alternative. If that $82,000 support breaks under extreme selling pressure, then the next level to watch would be $76,000, which would become the new danger zone. So, to summarize our outlook, the short-term view is cautiously bearish with a high chance of a final dip. But the long-term picture for Bitcoin remains extremely bullish. These corrections are often the price of admission for the spectacular gains that follow. Now, I want to hear from you. What do you think? Will Bitcoin actually touch $82,000, or do you think the bulls will step in and cause a bounce before we even get there? Drop your prediction in the comments below. I read every single one. If you found this breakdown helpful and enjoyed the video, please do me a huge favor and smash that like button. Subscribe to the channel and don't forget to hit the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video. Stay smart, stay invested.
Please like, share and subscribe.
Please like, share and subscribe.